Okay, Thomas Freed here, and I've talked about in the past about how the income tax is not a direct tax, it's an indirect tax. And I've also pointed out that the scheme of the tax legislation that was put in place was one of payment after indirect collection of the tax. And that's, of course, what the income tax was all about, is collection of the tax at the source, getting the money before the worker got the money so that the tax could be collected without any problems and collected indirectly by a collector. This was put in place the same way that a sales tax works. The sales tax is paid by the store, and it is only the store that has the duty to turn over what it has collected from its customers. So even though the money to pay the tax comes out of the pockets of the customers of the store, they are not the taxpayers because they don't have a legal duty to pay any tax into the treasury. Only the store has the legal duty to pay the tax into the treasury. And of course, it has the legal duty to collect tax from anyone who makes a purchase at the store. But the store does not have an unlimited power to collect tax. It can't go out into the street and collect tax from a woman it finds walking on the sidewalk with a loaf of bread under her arm, and it can't go into the kitchens in the neighborhood and tax any woman it finds baking a loaf of bread. It can only collect tax from the people that come into the store as customers and buy a loaf of bread from the store. And then the store has a duty to collect the tax and to pay it over to the treasury, because the money it collects as tax is not for the store to keep. So the law makes the store liable for paying the tax into the treasury and responsible to perform the duty of collecting the tax on sales. So this is classically indirect. It's a sales that's paid by a collector who collects it from other persons who engage with the collector on a voluntary basis. And that's the way that it works. And if you choose to do business in the manner taxed, then the collector has to deduct and withhold money as tax and pay it into the treasury as the liable party and the true taxpayer. Okay, so everyone seems to understand that with the sales tax, but nobody seems to get it with the income tax, even though it's the employer that collects it and is made liable for the payment of it. So let's look at this. This is the Brushaber versus Union Pacific Railroad case. It's the first case upholding the constitutionality of the federal income tax. It was handed down in 1916, and let's look at what the nature of the case says. Here in the syllabus, it says, under proper averments, a stockholder's suit to restrain a corporation from voluntarily paying a tax charged to be unconstitutional is not violative of Rev Statute 3224. So, it says a stockholder's suit to restrain a corporation from voluntary paying. So this isn't about Brushaber, the stockholder. Everyone thinks he's the taxpayer. He's not. He's a stockholder. He's suing his company to stop them from paying the tax. They announced they intended to comply. In this case, that of a stockholder against a corporation to restrain the latter from voluntarily paying the income tax imposed by the Tariff Act of 1913. So it's a tariff. A tariff is one form of an impost. An impost is the power to tax foreign activity, foreign persons, foreign imports, in foreign places like foreign countries under tax treaty, or in territories and possessions, which are considered foreign to the 50 states united. And the government notified the government of the pendency of the action in the United States was heard as an amicus curiae, okay? So the stockholder sued his company to stop them from doing what they announced they were going to do, which was comply with the new tax law. And they say in the syllabus that the 16th Amendment was obviously intended to simplify the situation and make clear the limitations on the taxing power of Congress, and not to create radical and destructive changes in our constitutional system. And they finish, the 16th Amendment does not purport to confer power to levy income taxes in a generic sense, as that authority was already possessed. And what this is referring to is the authority tax income previous to the 16th Amendment related to the impost, duty, and excise taxing powers, where income was used as the yardstick to measure the amount of tax owed on the earnings derived from the activity that was subject to the impost, the duty, or the excise. With imposts taxing foreign activity, duties taxing exported goods, and excises taxing the manufacture, consumption, and sale of commodities like alcohol, tobacco, and firearms within the country, on licenses to pursue certain occupations like licenses to sell alcohol, tobacco, and firearms, and on the corporate privilege, where it is the privilege that is subject to the tax. An excise is a privilege tax. The tax is the privilege, not rights. And that's why there was no income tax on the people previous to the 16th Amendment, because the privilege was only deemed to be in place with respect to corporate earnings, where corporations don't have a right to exist and everything they do is privileged based on the power given to them to exist as a corporation rather than a living person. It's that privilege of incorporation that makes everything they do subject to taxation, and that all existed previous to the 16th Amendment. Power to tax income as a function of excise taxation in taxing the income and the earnings of corporations. And in a graduated manner, that was upheld. Okay, so let's go on. In looking at what the court wrote in Brushaber, we see on page 9 that they wrote, as a stockholder of the Union Pacific Railroad Company, the appellant filed this bill to enjoin the corporation from complying with the income tax provisions of the Tariff Act of October 3rd, 1913. Now, that's the Underwood-Simmons Tariff Act of October 3rd, 1913, which required companies to deduct and withhold money from payments made to foreign persons. It's a tariff act. They're taxing foreign activity. And this Tariff Act requires everybody doing business with foreign persons, companies, individuals, tax-exempt organizations, to deduct and withhold money from payments made to those foreign persons. And the Union Pacific Railroad Company announced that they intended to comply with this act. They were going to take on the burden and administrative and financial burdens of figuring out who to withhold tax from, how much, and then to send it in as the taxpayer. And Frank Brushaber, the stockholder of the company, said, no, I don't want you spending your time and money on that working for the government. This is unconstitutional. They can't co-opt my company's resources and make them serve the government. They work for me. This is going to be bad. They don't know who to withhold from. They'll make a mistake. We'll get sued. They won't withhold the right amount. There'll be interest. There'll be penalties. This is unconstitutional. You can't lay this burden on my company. And the court went on. Eventually, the court told Frank Brushaber, shut up, sit down, you got no argument. This isn't unconstitutional. There's no big deal about it. You're not paying tax yourself, and there's no undue burden. You just write a smaller check to the individual and send the balance to the Treasury. There's no big deal here. This is how taxes are collected everywhere. But that was the nature of the case. Brushaber was objecting to the companies saying, we're going to do this. So let's look at what it was they were going to do. And analyzing the legislation before them, the court wrote, the act provides for collecting the tax at the source. And there it is. That's the key. This is the whole thing. Collecting the tax at the source. Getting money as tax as payments are made. Not getting them later on a report of them, but as the check is cut to make the taxable payment, a portion of it is deducted and held for the government. And the person that is making the payment is made a tax collector in the sense that they have the duty to withhold the amount of tax imposed and then are made liable for sending that into the Treasury, as the collector is the taxpayer, not the worker from whom the money is withheld. And that is that say the act provides for collecting the tax at the source. That is, makes it the duty of corporations, etc., to retain and pay the sum of the tax on interest due on bonds and mortgages, unless the owner to whom the interest is payable gives a notice that he claims an exemption. Now, here's the Brushaber part. This duty cast upon corporations, because of the costs to which they are subjected, is asserted by Brushaber to be repugnant to due process of law as a taking of their property without compensation. So there's Brushaber's complaint. You're interfering with the corporate and taking their property. And he goes on to say that we'll deal with that. But the whole point is it's collection of the tax at the source. And Union Pacific Railroad said, we intend to do this. We're going to assume the duties of a tax collector, figure out who to withhold tax from, and send it into the Treasury. Brushaber objected, and he lost the case. But let's go on and look at what the court held by the previous ruling. Okay, this is actually from Stanton v. Baltic Mining, which is the next case in 1916 that was settled and announced consecutively with Brushaber. The Supreme Court took two cases on the income tax. Brushaber, which was about the duty to collect the tax, and Stanton v. Baltic Mining, which was about the power of the tax to reach corporate excise, corporate activities as an excise. And in both cases, by the previous ruling, Brushaber, it was settled that the provisions of the 16th Amendment conferred no new power of taxation. They reject the claim that a new power to tax directly is created, but simply prohibited the previous complete and plenary power of income taxation, referring to the power to tax income as part of the excise, impost, and duty powers possessed by Congress from the beginning. It can't be taken out of the category of indirect taxation to which it inherently belongs. So they declare it's indirect. It's always been indirect. The amendment clarifies the position. It prohibits it from being taken out of the category to which it's always belonged, because that would create a power to tax directly that had no limitations on it, and that's not possible. Every taxing power is limited in some manner. All indirect taxes must be uniform. All direct taxes must be apportioned to the states for collection and laid in proportion to the census. And the other interpretation that the government now argues for today, a direct tax without limitation, creates an unlimited power to tax, which is outside the founding precepts and basic principles of the Constitution, which is that all of the powers are limited in some manner or another. And again, they write, we are of opinion that the confusion is not inherent, but rather arises from the conclusion that the 16th Amendment provides for a hitherto unknown power of taxation. That is a power to levy an income tax, which, although direct, should not be subject to the regulation of apportionment applicable to all other direct taxes. And the far-reaching effect of this erroneous assumption will be made clear. So here they talk about what would happen if they allowed it to be interpreted as a direct tax. It would destroy everything, which is what we just said. And they go on. It clearly results that the proposition and the contentions under it, if acceded to, would cause one provision of the Constitution to destroy another. An intolerable situation. That is, they would result in bringing the provisions of the amendment exempting a direct tax from apportionment into irreconcilable conflict with the general requirement that all direct taxes be apportioned. You can't do it. You can't have one clause destroy another. This result would create radical and destructive changes in our constitutional system and multiply confusion. Boy, did they see that coming. Because that's where we are today. That's certainly where we are today. And after Brushaber, the Treasury Department issued Treasury Decision 2313, which says, under the decision of the Supreme Court, these are the instructions to the tax collectors on how to deal with the new tax ruling. It is hereby held that income accruing to non-resident aliens in the form of interest from the bonds and dividends is subject to the income tax. Non-resident aliens are not entitled to the specific exemption. Remember the exemption the court referenced? That's for citizens in Part C, but are liable for the normal and additional tax. Now here they make non-resident aliens liable in a Treasury decision because the law doesn't do it. The law only makes the collectors liable. And it says the responsible heads, agents, or representatives, i.e. the collectors, who are withholding money from the non-resident aliens, who are in charge of the property owned or business carried on, shall make a full and complete return of the income therefrom on Form 1040. Collectors are supposed to report business of the non-resident aliens on a Form 1040. Now, the use of the form got changed in World War II, but this is the original use. Not to report a citizen's income, but a non-resident aliens. And it doesn't come from the alien, it comes from the tax collector. Now, who is the tax collector? Well, we go to the title of law, because this stuff has to be in law, right? I mean, this is the law. You can't just make it up. It has to be there. And if we go to Title 26, United States Code, Section 7701A. Now, 7701A1 is where the term person is defined as being a corporation, a trust, an individual, a partnership, basically any entity that exists, and it's defined for use throughout Title 26. I only refer that because A16 is the subtitle A, 1913, tax collector. Employers didn't exist as a class of tax collectors until 1945. It's this withholding agent who is the tax collector, and it's hidden way back here in 7701A with person, so that you won't see it at the beginning of the title. But look at this, the withholding agent, A16. This is the original class of tax collectors with the law duty to withhold the tax and collect it, and then are made liable for what they've collected, the same way the store was. The term withholding agent means any person required to deduct and withhold any tax under the provisions of sections 1441, 1442, 1443, or 1461. Well, here's 1441, withholding of tax on non-resident aliens. Here's 1442, withholding of tax on foreign corporations. Here's 1443, withholding of tax on foreign tax-exempt organizations. And here's the last code section, 1461, liability for withheld tax. Every person required to deduct and withhold any tax is hereby made liable for such tax. But what do you know? The tax collectors are the withholding agents for the subtitle A income tax of 1913 don't have legal authority to collect tax from American citizens. Only foreign, non-resident aliens, foreign corporations, and tax-exempt organizations. Do you think that's because it's a tariff act that taxes foreign activity? So this whole thing is a complete and total fraud. The original tax was a tax on foreign activity that was collected by withholding agents. And then they had World War II, and they got away with the victory tax, and we switched. In 1945, they enacted a new set of laws, and that was the Subtitle C employment tax laws in 1945. And here they are. Title 26, Subtitle C, employment taxes. This is the body of law enacted in 1945. This is the code statutes that we're still under after some additions and changes, of course, since 1945. But we can see here, Chapter 21, the federal insurance, that's FICA, that's the Social Security. The two-part tax, half by the employer, half by the employee. Here's the railroad retirement tax. The railroad system had their own separate pension system. They said, we don't have to do FICA, that's unconstitutional. The Supreme Court agreed. So the railroads either have to maintain a pension system or put their employees in Social Security and let them pick it. Then you have the Federal Unemployment Tax Act, which is on the employer, and you have the same thing for the railroads again, an unemployment tax for the railroads because they're separate from everybody else because they've got their own pension system. Okay, then you get to Chapter 24, collection of income tax at source. Oh, what do you mean? Collection of income tax at source on wages. You mean 33 years later, in 1945, they used the exact same scheme of collection of the tax at the source? Yep, that's right. They didn't impose any new tax. They didn't make anyone else liable. Well, they did, but let's take a look at that. And here we are, Chapter 24, collection of income tax at the source is 3402, income tax collected at source. Gee, the theme keeps repeating, doesn't it? Collected at source, collected at source, collected at source. And who did they make liable for this tax that's collected by the employer? By a voluntary allowance certificate? Oh, look, 3403, the employer shall be liable for the payment of the tax. The employer shall be liable. The collector is still the liable party. The withholding agents were liable under 1461 for what they collected from foreign persons. And employers are liable as the collector for what they've collected from employees who allowed it and requested it. So the question is, why did you allow it and request it when there's no tax imposed on your earnings? The tax was imposed on foreign persons' activities in 1913. They're letting you assume that tax reaches you because you were touched by the victory tax for 2 years during World War II and forgot there's a difference between the victory tax and the income tax. The victory tax was a 2-year temporary war revenue measure that expired, and when it expired, there was no longer any authority to collect tax from American citizens because there was no tax imposed on their earnings from 1913. And the government knew that, so they created this section, 3402, which doesn't impose a tax, and if you'll notice in Chapter 24, there is no tax imposed. If we look at any of these others, FICA, tax on employees, there's the rate of tax, tax imposed. Tax on employers, there's the rate of tax, tax imposed. We go back, we go to the next, Unemployment Acts, rate of tax, there's the tax imposed. We go to the next, the Railroad Unemployment Imposition of Tax, there's the tax imposed. The Railroad Retirement Act, tax on employees, there's the tax imposed. Tax on employee, there's the rate of tax, tax imposed. Employer, tax on employer, there's the rate of tax. Every single one of these other subtitle C chapters, the first code section is tax imposed. Chapter 24, it's definitions, because there is no tax imposed. And 3402 says, except as otherwise provided. Every employer making payment of wages shall deduct and withhold. So except as otherwise provided, that means this isn't the true force of law. There might be something that says different. Now, sure enough, if it's not otherwise provided, then every employer making a payment of wages shall deduct a tax in accordance with the tables. But let's go see what might be otherwise provided. This is A, and this is the code section. Every employment attorney tells you this is why we have to withhold tax. Every employer making payment shall deduct it. But what about this? Except as otherwise provided. What about this? What about, oh, we don't want to talk about that. Ignore that. Oh no, let's not ignore that. Let's go look at N. Subsection N. Employees incurring no income tax liability. Oh, you mean if you're not a non-resident alien under Treasury Decision 2313 and you're not a collector as a withholding agent and you're not yourself an employer, you have no liability? Is that what you mean? Yeah, that's what they mean, but most Americans don't know that, do they? And it says notwithstanding. What does notwithstanding mean? The attorneys don't know. Notwithstanding means regardless. Regardless of. So this reads, regardless of any other provision in the section, an employer shall not be required to deduct and withhold any tax under this chapter. Chapter 24, income tax, collected at the source. Upon a payment of wages to an employee, if there is an effect with respect to such payment, a withholding allowance certificate furnished to the employer by the employee, certifying the employee, one, the wrong way. Where are we? ILMN. There you go. One, incurred no liability for income tax imposed under subtitle. Jumping on me. Incurred no liability for income tax imposed under subtitle A for his preceding. In other words, if he didn't collect any tax, if you weren't a withholding agent, you had no liability for tax under subtitle A. And two, anticipates that he will incur no liability for income tax imposed under subtitle A for his current taxable year. So are you withholding any tax from non-resident aliens right now, this year? If you're not, you have no liability because you're not a withholding agent, and you're entitled to claim exempt on your W-4 because there's no tax imposed. The whole thing is about collection of the tax at the source. Collection of the tax at the source, Chapter 24, collection of the tax at the source, 3402, collection of the tax at the source, Supreme Court in 1913, collection of the tax at the source. The whole thing is a collection of the tax at the source, the same way that a sales tax is collected by a tax collector, and then only the tax collector, the store and the sales tax, and the employer or the withholding agent under the income tax are the parties liable and responsible for the payment of the tax, not the individual. The whole system is a fraud intended to enslave you under the second plank of the Communist Manifesto, which is what is actually being enforced, not constitutional taxation. And none of the money goes in the Treasury. It all goes to the private corporation, the Federal Reserve Bank, to collateralize the $35 trillion in debt. And as long as the American people allow their labor to be used and themselves to be converted to peons instead of free people, and their labor is being used to collateralize the $35 trillion in debt, the bankers will continue to lend currency into oblivion to the idiots in Congress who are part of this conspiracy to enslave the American people and rule them through class warfare rather than to represent them through uniform taxation of the people and their activity. The whole system is a fraud. It was all the same right from the beginning. Collection of the tax at the source, that's all it's ever been about. It's collection of the tax at the source. The Supreme Court told us that right from the beginning. The Act provides for collecting the tax at the source, and they've shifted it from indirect collection to direct taxation of all labor, which is unconstitutional, is unauthorized, and isn't in the Constitution. Doesn't make you liable for the tax, and there's no requirement for you to file a Form 1040 to report your own earnings that exists in the law to this day. And here the Congressional Research Service told us in 1979, the 16th Amendment conferred no new power of taxation. This is the quote I quoted you. It prevents it from being taken out of the category of indirect taxation. It is clear the income tax is an indirect tax of the broad category of taxes, duties, imposts, and excises. This tax isn't a fourth category. It's duties, imposts, and excises. That's it. Exported goods, foreign activity, corporate activity, and commodities and licenses. That's it. There's no taxation of labor. There never has been. And as long as the Constitution is in place, there cannot be. And if you need more, you want to go look it up, check it out, read all about it, get informed, get educated at tax-freedom.com. You can get help answering the IRS at irszoom.com. If you like the video, tell your friends, family, neighbors, and friends and business partners that everybody needs to get informed if we're going to take back America. You don't need to act on this information if you're afraid, but everybody needs to be informed. So like the video, subscribe, and encourage others to do the same thing. And with the spread of this information and the truth shall make you free once again. Everything else comes up short.